Hello and welcome back to Money Never Sleeps. My name is Mac from M&A Wealth. If you'd like more information about what you hear during the show, give us a call at 866-973-3627 or visit us online at mnawealth.com. And while at my website, click on the page to check out past shows and subscribe on Apple Podcasts or Spotify. A Kiplinger article, a 10-year checklist for retirement planning, has some retirement planning insights that I'm excited to share. And for purposes of this show, I'm going to focus on spots 10 through 5. The article begins by explaining what you should do at the 10-year mark and then moves forward until you're a year away from retirement. If you're 10 years from retirement, you're likely older than 50, which means you can contribute more money to your tax-advantaged retirement plans. This year, the IRA and 401k contribution limit is $30,500 in a 401k and $8,000 in an IRA outside of your work. Additionally, if your company offers a matching contribution, you will want to consider contributing enough to trigger that match. When you find yourself a decade away from retirement, it's also a good time to begin considering what you want your retirement to look like. Where will you live? How will you keep yourself occupied? If you're married, do you and your spouse have a similar vision? Contemplating questions like that isn't something that should be left until you're cutting your retirement cake. When you're 9 years away from retirement, your next checklist item should be fine-tuning your investment allocations with the assistance of your financial services professional. If you're running behind on your retirement savings goals, you may want to meet with your financial services professional to discuss taking additional risk for the goal of greater growth. Who doesn't like a good treasure hunt? Year 8 on the checklist urges you to grab your map and shovel and go looking for money you may have forgotten about. And I know what you're thinking, but the truth is people forget about money far more often than you'd think. Think about every job you've had. Is there a chance that you left behind some retirement savings, maybe some pension or a retirement account? How about stock? The article cites a study from Capitalize, a tech platform, which found roughly 29.2 million people have forgotten 401ks containing an average balance of more than $56,600. The good news is that you can roll your old retirement plans into your current workplace plan or an individual retirement account, thereby making it easier to track and manage all your money. And it's not just 401ks. Open all your bank accounts, even the one you opened when you were a teenager and got your first job. Is there money just sitting in them and not earning much interest? Work with your financial services professional to put that money to work. Lastly, year 8 on your checklist is also a good time to get a thorough physical and to get advice on improving your diet and exercise routine. Bear in mind that taking close care of your body and mind may go a long way in protecting that nest egg you've worked so hard to build up. Making retirement plans and then trying them out is your 7-year check mark. Basically, this is the moment when you want to begin giving a lot of thought to your potential retirement budget. What's your vision for the ideal retirement? Now, how much do you think it's going to cost you? Consider everything you'll have to pay for during retirement, including housing, vehicles, food, travel, hobbies, insurance, and taxes. Don't forget about things you're not spending on money right now, but will be in retirement. For example, Medicare Part B premiums, which this year run $174.70 a month, and typically increase annually because of rising healthcare costs. Also, meet with your financial services professional to discuss the possibility of eventually purchasing a Medicare Advantage plan or Medigap plan, plus Medicare Part D plan for prescriptions. While these private insurance plans may be necessary to address out-of-pocket expenses that Medicare doesn't cover, they're going to cost you. Your financial services professional will have insight into what these options cost and whether they may be a fit for your financial strategy. The 6-year spot on your checklist is for analyzing your income picture and determining if you'll have enough to not just survive but thrive during retirement. Look at your current budget and estimate your likely retirement income to see if it will handle everything. You may consider using the 4% rule here. Simply multiply your anticipated retirement balance at retirement by 4% to see how much you may want to consider taking out each year. For example, if you anticipate a $1 million portfolio, This rule anticipates that you could reasonably withdraw $40,000 a year from your savings with needed adjustments for inflation. Add this amount to your other expected retirement income sources, including a pension and Social Security. Then, meet with your financial services professional to determine if your savings and income sources are on track to help you maintain your preferred lifestyle during retirement. The 5-year spot on your checklist is all about rolling up your sleeves and gaining a thorough understanding of where your money comes from and where it goes. This may also be the ideal time to begin considering when you want to begin taking Social Security. Those payments can begin as soon as you're 62, but the longer you wait, the more you'll get every month. For example, at 62, you might get $1,400 a month, $2,000 a month at 67, and $2,480 a month when you're 70. Remember, once you've filed for Social Security, you're locked in, so really go through all your options with your financial services professional. The 5-year mark may also be a good time to tackle high-interest debt like credit cards, because you're still bringing in consistent income from your job. Ridding yourself of high-interest debt can send you into retirement on a high note. Also consider how you may address potential long-term care costs during retirement. Even if you're in excellent health now, it's difficult to predict what your health will be like when you're in your 80s or 90s. And as we've discussed before, long-term care is costly. In fact, the article notes that right now, a private room in a nursing home runs about $9,000 a month, or a little more than $8,000 a year. While traditional long-term insurance policies are a good fit for some people, others may benefit from asset-based long-term care, which is life insurance that includes certain long-term care benefits. These policies provide a smaller death benefit than traditional life insurance, but they also offer features that may guard your assets against the negative financial effects of long-term care expenses. And if it turns out you never need long-term care, you don't have to sweat the idea of spending premiums on something you never use, because your loved ones may still receive a death benefit. If you have any questions about the new generation retirement system, visit my website at mnawealth.com or call my office at 866-973-3627 to discuss how my team might be able to answer your questions and address your concerns. It's our goal to help you prepare for the retirement you've worked so hard for.
Disclosure. All matters discussed during the show are for informational purposes only. Opinions expressed are solely those of M&A Wealth and staff. All topics covered are believed to be from reliable sources. However, M&A Wealth makes no representations as to its accuracy or completeness. This commercial shall in no way be construed as a solicitation to sell securities or advisory services to residents where permitted. Topics should be discussed with your individual advisor prior to implementation. Advisory services offered through M&A Wealth, a registered investment advisor in the state of Texas. Insurance products and services are offered through PNC Life Insurance Agency, an affiliated company. M&A Wealth and PNC Life Insurance Agency are not affiliated with or endorsed by the Social Security Administration or any government agency.